Deutsche Bank is predicting a recession. Railway workers may go on strike. Protesters continue in China. And is smells the cat okay? If you think the world is falling apart, yes, it is. Hey everyone, this is Chris. Welcome back to the channel. And this is your daily news. So first I want to go over what is a recession, because it's something we're going to be talking about probably through next year. We'll read the definition together. So it says here, recession, a significant, widespread, and prolonged downturn in economic activity. So there are three parts which I think that is worth mentioning, right? So one, significant, could be really big. The downturn could be bad, right? So significant, big. Widespread means it could be affecting a lot of people, right? So all facets of the economy, different industries, etc. And prolonged, it could be for a long time. So we don't know exactly what it's going to be, but sort of the way things are going with rising interest rates, it just seems to be that the case. Deutsche Bank actually has released sort of their prediction of where they think the markets are going to go. We'll go over some of the details. It's actually kind of funny how they think it's going to happen. So first you can see that the headline is, the stock market will fall 25% when the looming recession hits in mid-2023. So they think in mid-2023, things could get ugly. Look at their actual language, which I'll read here. It's really quite funny. We see major stock markets plunging 25% from levels somewhat above today's when the U.S. recession hits, but then fully recover by the year-end 2023, assuming recession only lasts a few quarters. So basically what they're saying, they say, okay, we think the markets can go up to say 4,500, talking about the S&P. Then we think it's going to go down 25%. And then we think it's going to go back up to 4,500 again by the end of 2023. So, I mean, they're just saying the market's going to be up and down. And I'd love to hear your thoughts on their prediction. So this is from Deutsche Bank. We read that the Fed and the ECB, so that's the European Central Bank, as being absolutely committed to bringing inflation back to desired levels within the next several years. Although the cost in doing so may be lower than in the past for reasons we lay out, it will not be possible to do so without at least a moderate economic downturns in the US and Europe. So they just say you're going to have a downturn, right? So recession, right? They're not necessarily saying it's going to be big, but it's hard to do without any kind of downturn. And then they say here, which is something I keep mentioning all the time, and significant increases in unemployment, right? So I think that is a real problem and a real thing for many people in this. I keep saying over and over again, in this market, make sure you have job skills. I would say that's the most important thing right now. Keep going on. Our house economic forecasts call for a mild recession in GDP terms, but one that is focused on goods and housing-related products to which the S&P is disproportionately exposed and where the pandemic boom was concentrated. Our earnings baseline therefore embodies what is close to a typical recession decline. So they don't necessarily think it's going to be a big one, but they say typical. But again, you don't know. It is the future. And they're saying, you're going to have trouble with goods and housing-related products. I think that's quite interesting what they're saying. Now, here's a headline from Goldman Sachs, and they're kind of giving you a rosier scenario. So they're saying S&P 500 will be flat and have no earnings growth in 2023, even in a soft landing scenario of GDP gain of 1%. And if you look at the details here, this is sort of the key right here, is they say, think about that as your downside maybe 20% lower. Again, that's a scenario, not a baseline, but a scenario as opposed to market falling 10% to 2,600 before ultimately rallying back up to 4,000. So if you look at what Deutsche Bank says, or you look at what Goldman Sachs says, no one is saying that there's going to be like crazy high upside, right? And this is sort of why I've been sort of mentioning you guys all along. I just think there's a lot of downside risks in the market, right? So maybe the rosiest scenario would be maybe 10% from here. That's the rosiest scenario, right? And then maybe the bad scenario is after you go up that 10%, you go down another 25. Maybe Goldman say maybe you go down 20, something like that. It's just, I don't think it's going to be great. And the other thing is too is you look at the Buffett indicator, and you guys can look this up for yourself, but when I look at these numbers, and this is basically the value of the market compared to the GDP, this is saying that we're 30% above the sort of normal trend line of where the market normally trades, right? You take a look at another thing, it basically tells you the same kind of thing. This is the S&P 500 PE ratio, so that's the price of stocks, right, in the market compared to how much money the companies earn, right? So the price earnings ratio. This is reading at 20.58. Now, this is past looking, okay? Forward looking, meaning that predicting the future is tough. No one knows 100% what it is. And this is why stocks always do what they do, because we can see the numbers based on what is the company worth, based on how much money did you say in the last year. But now we're trying to predict the future. Now, according to this though, just to give you a general sense of where we are, we're trading at 20.58 PE, right? That's for the whole market. The average time, right, the mean of this trading is usually around 16. So this would suggest that we're expensive as well. So you have the Buffett indicator say we're expensive. The S&P 500 P ratio saying we're expensive. We also have Goldman and Deutsche Bank saying the market could go down. So all the numbers are roughly about the same. If you take a look at the Treasury yields, you can see here the 10-year is 3.75, the 2-year is 4.48. When the short term, right, the 2 years above the 10-year, that usually indicates recession. I know we're saying thing over and over again. Looks like recession, looks like recession. But I just want you guys to be prepared for this. This is sort of why we talk the way that we do. It looks like it's not just in the USA, but the global yield curve, meaning that comparing the short-term rates and the long-term rates is also saying the same thing, that the long-term rates are lower than the short-term ones. This is actually quite interesting as well. It's a really big, stark difference between the 10-year and the 2-year. And in fact, I guess this is like the biggest difference in the 1980s. So they're saying, this is a headline, the bond market's recession is signal is the loudest in 40 years plus. So I think we know all this stuff, but I'm just telling you guys that I don't expect, and according to the same as Wall Street as well, don't expect any great earnings in the next year or so. Things cost a lot of money, right? With inflation, people cost money, goods cost money, everything costs a lot, and it eats into your profit margins. Plus, consumers and businesses don't have money to spend at said companies to make money. Another thing too, which is certainly important to mention, which is really interesting. We know that tech layoffs are firing people, but did you know it's like really a lot compared to history, but not quite as much as .com. And I want to show you this. You can see the headlines here. It was not sustainable. Tech layoffs approach great recession levels. So here's the numbers. I was looking at this. So right now, in the current environment that we're in, this is saying that we've lost about 60,000 tech jobs. Now, in 0809, according to this, we lost 65,000 tech jobs. So actually, we're not quite at those levels yet, but I do think more companies are going to lay off. And then in comparison here, you can see they're saying that, and I'll just read it to you, whether all slashing will approach levels only previously seen during the dot-com bust, when almost 300,000 tech jobs were lost over 2 years. So this is like really, really different so far. So far we're like more like firing people in terms of like 0809 type of situation, but not the same as .com. And the big difference with .com actually was really interesting is that many people who lost jobs during that time, it was like in companies that had no revenue and like zero sales. They just weren't, how can I say, they were nascent companies. The way that we have the layoffs now is like companies like Google are firing people, Amazon, like these are, long-running companies. And I think the difference between .com and today you're seeing a lot of the froth more like in the crypto markets, that kind of thing. So I've said it many times on the channel, until the crypto markets bottom out, we won't see a bottom of the market. Also too, regarding the rail strike, just want to give you a few details. So here's the gist right now is actually Congress and Biden's calling on Congress to step in and try to basically stop the strike. And the question I'll pose to you, and this is a really fundamental question, is should we allow people to strike, right? Because they want to get more pay, they want more benefits, and let them do what they like? Or should we say, you know what, you have to work because if you don't work, you hurt everybody else? And that's kind of the fundamental thing that's going on here is who's more important, everybody else or the railroad strikes? And I'll leave this up to you for you to decide. I want to read you some different people's opinions coming out of Washington, D.C., and it's actually really quite interesting if you read these things. Full disclosure, I don't really like either party. I just tend to look at the problems that we face, and whoever's got the better solution, I'll agree with. I don't have to side with either party. I want to make that very, very clear. So let's just kind of see what they're saying here and what people are saying. It's really quite interesting. So here's some details. So evidently, according to this, there are 12 railroad unions. Essentially, 8 said that the deal between the companies and the workers was okay, but then I guess 4 of them were not okay with it. And so that's why we're looking at a strike, because 4 of the unions are not okay with it. You can see with some of their complaints. Workers have complained of chronic understaffing and erratic shift scheduling, while demanding better paying conditions as rail carriers generate substantial profits. Freight rail has grown in importance amid cargo ship backlogs and a shortage of truck drivers. So, the workers are basically kind of saying like, God, look at these companies making all this money. Why aren't you paying us? That's essentially what it is. And like, why are you making us work so hard? Why aren't we getting sick leave? Like we asked, paid sick leave. That's a better way to say it. And one of the things too is kind of going on is normally you would think the Democrats would side with labor, but that's not the case. Kind of what I feel like politically is happening is for Biden and their team, the railroad strike would really hurt the economy, and that looks bad on them, right? So they have to choose of like, okay, do we want to side with our normal constituents, right, being labor, right, the unions, or should we side with like trying to help everyone in the economy? It's not an easy decision, to be perfectly frank, and I think basically it's a no-win one for them. Either way, you're going to lose. It's a bad decision or a bad a bad situation. Either way is a bad choice, essentially. This is a quote here from Biden. He's saying, it's not an easy call, but I think we have to do it. The economy is at risk. And this is in terms of like basically forcing the workers to go back to work and just like, hey, workers, take the deal, right? It doesn't sound very nice though. And then also too, this is, we'll read some more details. Pelosi, Chuck Schumer, and the Democratic Majority Leader, and Mitch McConnell, the Republican leader in the Senate, said they were ready to pass the fix quickly to avert a strike. And quote from Pelosi, I don't like going against the ability of unions to strike, but weighing the equities, we must avoid a strike. So this is actually, I think, essentially a political dynamite for the Democrats. I don't think I don't think there's any good choice for them, to be frank. They're just not. Because like I said, you either hurt your people that you normally support, or you hurt everyone else. So either way, it's not good. This is actually coming from the railroad workers. So one person is saying here, this is a legacy-defining moment for Joe Biden. And another quote, he is going down as one of the biggest disappointments in labor history. So that's pretty mean. And in fact, I don't disagree. I'm just saying, I don't think they have any good choices here. And then moreover, more details. If Congress were to enforce the contract with legislation, it would be the first such step taken by lawmakers to avert a rail strike since George H.W. Bush presidency in 1992. So we haven't had this problem. Was that, I have to do my math here, is that like 30 years ago? Yeah, that should be right. Sorry guys, it's early in the morning here. It's a little bit slow. But one of the things that's going on as well is there's a lot of companies that are like, hey, you can't let the railroad workers go on strikes. It's going to cost all of us money. So it's a real thing. Another one, here's a quote from the AFL-CIO. Here they're saying, there are reasons why 8 of the unions ratified the agreement, right, said Greg Reagan. So he's the president of the AFL-CIO. He's saying, I think the anger at the president is misplaced, to be honest. I think the anger needs to continue to be focused on the railroads and how they operate. They refuse to budge. So I think it's kind of interesting because his point is like, hey, 8 out of 12 have approved it, right? So it's only those 4 unions that are holding all of us up, and they're just being greedy. I'm, paraphrasing it. So I'll let you guys decide. And I think in any of these kind of situations, usually people take partisan sides. If you hate Biden, you think he's all wrong, doesn't matter what. If you love Biden, you think he's right no matter what. So I just try to just tell you different points of view. And in my opinion, I don't think they have any good choice on this. If I had to choose a side, I'd probably go with the workers and say, hey, if your conditions aren't right, you can strike. However, unfortunately for the railway workers, they're similar as air traffic controllers. They're under different labor laws than the rest of the country because they're considered a like essential industry. So theoretically, the government can just like negotiate for them and make them go back to work. But I don't really know how that would work politically, just like forcing people to work. I don't think it would be a great look. Marco Rubio, and this is the play for the Republicans. I agree with the Rubio. If you're a Republican, you should come out and just say, Biden's doing bad things and just do opposite of whatever they say. Because it's good for political points. So I agree. Rubio's making a smart play there in terms of politics, and that's how the game is played. Whether or not he believes this stuff, who knows? In regards to this kind of stuff, also too with politics in China, you have a very different situation than the USA. Right now, you just have massive protests everywhere. So in there, they're not waiting for the government to say, hey, you can protest. Hey, go sit down. They're just what, we're gonna. Screw you, and we're going to try to get freedom and democracy for us. And I hope they do. And you guys may not know, I lived in Shanghai, I lived in Beijing, I lived in Shenzhen, so 3 different cities in China. And I feel very, very sorry for the regular people. And I mean it in all sincerity. If you've ever lived there, and I recommend anyone to go visit China, it's a fun country to visit. People are really, really friendly. Very, very friendly to foreigners. And I get really upset about it. I just don't know what to say. You can see my other views about this, but one of the things that really stood out to me when I was been watching videos of protests, and I'm sure you guys have seen this stuff as well, is they're nonviolent, and I think that really matters. If these kind of protests start turning violent and they start burning buildings and stuff like that, it loses legitimacy, and they're peaceful, and these people just want freedom, and I think that's sort of something that we can all rally behind if you do these things peacefully. And this is for anything that you believe in life. I believe in person's freedom of speech, right to protest. I think that's a fundamental right. But I do believe in peaceful things. And I was thinking about, like, here in the USA, I just point out this out. Like, I grew up in Portland, Oregon, and I, saw people looting and burning stuff in Portland, and was like, this is just craziness. And regardless of whatever you're protesting, if I agree or disagree with you or not, burning stuff and looting is not cool. And one of the things that I think is really quite different that we've been seeing in China is just a lot of just regular people, very peaceful, and wanting to have freedom. And I support that, and we'll see. Now, some people have asked me what is going on with the economy and the markets regarding China. So one thing I was looking at is interesting. I guess according to this, Apple's going to lose a lot of their production of iPhones. It's like 6 million iPhone Pros, which is their thing, and that's because of the workers at the Foxconn factory. And workers at the Foxconn factory have always faced sort of bad treatment and these kind of things, and it's always been a thing to where, like, true story, at these factories they have to put out nets by the windows because they're worried about people jumping out windows. It's like a real thing. And I think things will probably change in China eventually, but I don't know if it's going to be this time. I hope it does. I really do. Because I just can't stress enough. People have a right to think whatever you want. You have a right to whatever religion you want. I think that's another big right that just doesn't really exist in China. It's hard to explain it until you've been there. It's essentially the way that it's always worked is there's a big divide between the rich and the poor. And as long as the rich are happy and things are going okay for them and they're making money and their kids can go to school, they don't really complain that much, right? But what we're seeing now is like more the rich people and the sort of, say middle class, upper middle classes are protesting that. That's why I think there could be more real change. And it's kind of same with anywhere in any country, right? If you have a minority group of people protesting and it only affects the minority, then the majority, right? They say the 80% of the other people can say, it's just a minority. They're just a bunch of complainers. Don't listen to them, right? But if suddenly the majority starts complaining, which is happening in China, then you can see change, right? So this is for any country in the world. When it starts to affect the majority, people really start to take notice. And also, too, talking about taking notice, be careful when you travel. I guess cats can sneak in the suitcases. So I'll be curious if you guys ever heard of this thing. This was a couple days ago. I just saw this story that this cute little kitty. It was named Smells the Cat. And evidently there was someone at like a friend's house, and the friend's cat jumped into the suitcase. And then this is the picture. And then the cat got into the metal detector going through the TSA, and they're like, "What the heck is that?" And it's like you see the picture, and it's like it's like looks kind of weird. And then they by the suitcase you had the fur sticking out, and it turned out it was Smells the Cat. But Smells the Cat turned out to be okay. Made it through the airport TSA okay, and they figured out, oh my God, it's a cat. And moral of the story is, don't let your cats sneak into other people's luggage and go to the airport, because it may not turn out as good for your cat as Smells the Cat. So I'm happy the cute little kitty is okay. But anyway, I always like to do something just to cheer you guys up. And I know that when we talk about this stuff on the news, it's sometimes it seems kind of depressing and things like this. But one of the things that I think is important is if you're informed and you understand and you have realistic expectations of the economy, of your job, of sort of your industry, of just all the things going on, you'll do much better and you'll be much better prepared. So hopefully this is helpful for you. I'd love to hear your thoughts on these things, and I'll catch you in the next video.